In today's video, traders, we're going to be talking about a very simple yet effective strategy for beginners who are just getting into trading, whether it's Forex, stocks, whatever. This concept, I'm going to go through the technicals, I'm going to go through the entries, the exits, and the position sizing for you to potentially trade this sort of concept. So make sure you stay tuned. Let's go ahead and dive into it right now. Hey traders, welcome back to the channel. If you don't already know me, my name is Nick. I make all sorts of trading content here on YouTube. And if you're new here, make sure to subscribe down below for more free trading content. So let's go ahead and dive into this concept here. What we're going to be talking about is a very simple strategy, something that actually I've seen happen and work in the markets again and again, and it's actually very simple to spot. And once you kind of get the hang of this concept, you might be able to do the same. You might be able to catch the same kind of moves. So what we're going to be talking about is mostly a trend pullback continuation concept. Before we get too much into examples or exactly what this is, what we're basically going to be looking for is when a market is moving, we're going to be looking to trade the continuation of a trend. So what you can see is in this example here, the market is overall trending to the upside, right? And as we start to trend upsides, you can see that there are these kind of pullbacks in the trend, right? So we have a series of points where the market is moving in our favor to the upside, right? Moving impulsively and then retracing. And this is very natural in the markets, right? Because you have people who are buying here and pushing price higher. And as it gets to a certain point, then we have people who are like, okay, well, let me take some profits, which causes the market to go down. And then the next level of buyer steps in and continues to push this back and forth and so on and so forth. And we see this happen again and again in markets. This is basically the simple concept of a trend. So if you're a new trader, basically a trend is just the idea of markets trending either up or trending down. And this strategy that we're going to be talking about is going to be trying to adapt and join the moves of these particular trends as they pull back. So again, if we have a market that's doing something like this, we're going to be looking to get into the trade on the pullback. So we're going to be looking to join the move when price starts to pull back on a market that overall is pushing to the upside. Think of it kind of like if you went to a car dealership and you see a car that you really like and you see it trading at some amount of money and you say, I think that's too high, but then price starts to dip, it starts to come down and the dealer says, well, I'll give you this price. And you're like, maybe. And then when it gets down to this point, you say, okay, that's a buy. I'm going to buy this at this price and I'm going to watch it. I'm going to buy the car and get it for a good price. So then what we actually end up seeing is this plays out in markets again and again. This is the simple concept of a pullback. It's like getting a discount on something that you want to be long or short in. So with that said, what we're going to be using for this concept is mostly going to be trend lines. Very simple, keeping it very, very basic. A trend line just is used to kind of gauge the direction or the movements of price. Now, how you draw trend lines is a little bit of subjectivity to it. There's a little bit of kind of different ways to do it and people debate it. You can draw trend lines a couple different ways. For example, you can draw them across just the highs, which would give you all the little highs here. You can see if I zoom in just for a moment, we're drawing the trend line there along the highs. But what we also are going to be saying is that, okay, this is somewhat subjective. There's different ways to draw trend lines, but what if we draw trend lines across the closes? Well, now we get something like this. Take a look at this trend line here. And so again, going back to our concept, we're going to be looking to trade pullbacks in the direction of the overall market environment. Which way is this market going? Well, you can see that overall we're moving down. How can we filter that out? Well, you can see this red line here is the 200 period simple moving average. This to me is a good little indicator of the overall trend. So what you can do if you want to get this indicator, if you're looking at TradingView, is go to indicators and literally just type moving average and grab a 200 period moving average and you can adjust it up here in the corner. Okay, so with that said, we've got the 200 period SMA. What I'm going to be looking for is I'm going to be looking to trade in the direction of the 200 period SMA. Just like we talked about how we have pullbacks in a market, well, a trending moving average will kind of follow the direction of price and give us a bias or an indicator that, maybe we're going in the upwards direction or maybe we're going in the downwards direction. So in this particular case, in our example, we have a downward market. So what we're going to be looking for, let's talk about the entry. Let's talk about getting into these trades and how to manage them first. So We've got the 200 period SMA, as I mentioned, on the price. That will show us the overall trend direction. So we know that we are underneath the 200 period SMA. So we are going to be looking primarily for sells. We're looking in the direction of the move, a direction of the trend, which at the time being is to the downside. Next, we've drawn that trend line that we talked about, right? We drew it across the closes there, connecting price at the highs. What you'll notice is, go back to our series here. When we have a trend, we have pullbacks, corrections, pullbacks, corrections. Now we can see that there are pullbacks in this overall downward market. You can see it both in the long side or the short side. So we have that. And then the next concept, right, is we have that 200 period SMA, it's pointing down. So now how do we get into a trade? Well, what you'll see is that when we've drawn our trend line here, if we just hide the moving average for a moment, you can see there is a downward trend here and that the overall trend is to the downside. Well, when price pulls back to a level like this, right? Let's say that we've looked here, we've seen this market moving, and we say, okay, if price decides to pull back again to that trend line, then I want to be short. I want to continue in the direction of the trend. And remember, we want to get that discount pullback price. So that's where we would be looking to get in on the continuation of this downward trend line, okay? So when price comes here, this would be where I'm looking to short or sell this market. Now, we don't just necessarily want to go just because it comes to a trend line, it's going to go down. That's not necessarily the case. The market can break trend lines, it can change its way, it can do all sorts of things. So maybe instead we want to add additional factors to increase the chance or probability that our strategy will work out and that we'll make money on a trade. Well, how do we do that? We can add other technical indicators or technical solutions or technical setups to increase the probability of success. What about the simple concept of support and resistance? Well, take a look here. You can see that we came down to the price here and we actually found support momentarily before breaking down, finding resistance. This is now a level of resistance or supply. This is where sellers are strong and holding out on this particular level. So when price was down here, and we started to say, hey, the price is pulling back and I would like to get short, we have a couple different factors that give us a sell bias on this trade in this area here. Let's go through them just so we can remind ourselves. Number one, we're trading underneath the 200 period SMA. The downward trend looks like it wants to continue. The next setup is the trend line is pointing out that this would be considered a dynamic or a diagonal level of resistance, right? This is where sellers have been holding this mark and that we could see the continuation to the downside. When price pulls back, we have a third thing or a third level of confluence, which is this level of resistance. Previous support broke through and now has been holding as a resistance point. So this gives us three criteria to look for a sell side setup. And here's the thing, we see this combination more often than traders think. Trend continuations, pull back to a trend line, pull back also to a level of support or resistance, and then there's a nice little continuation trade to set up. So how do we go from there? Now we have the entry criteria lined up. How do we actually take the trade? Well, to me, depending on what you would like to look for, there's two sides of this. You can either, one, look for confirmation, or you can no confirmation. And what I mean by this is that if you're looking for confirmation, you could be looking for something like a candlestick pattern. If you know what a bullish or bearish pin bar looks like, you could be looking for a pin bar. In this case, we actually got one. We'll zoom in and take a look at that really quick, right? You can see price came up to our area and you can see we kind of had some doji looking candles showing potential weakness. And then what do we see? We saw price start to fall. So that's the version of having confirmation and then looking for the trade. The other side is no confirmation and just looking to sell into this level or this zone based on our other technical factors. Either way is possible. You'll have to play around with that and decide which one is best for you. In my case, I'd probably be looking for no confirmation on this particular setup. I just want to see a pullback to a key level that I've identified, and I'd be looking to sell or short and continue this market. So next up, how do we actually enter the trade? How do we put a stop? How do we put a target on this particular trade? Well, let me share with you guys my particular approach. I'm going to be looking to short this market, again, at our trend line level. And I'm going to use my target first. I'm going to set a target on my trade first. How am I going to do that? Well, I'm going to look for the continuation of this trend, just like we've been talking about. This is a trend continuation strategy. So I take my target and I will adjust it to the previous low. Okay? Where's the previous low? Right here. And any trending market is going to have a previous low that you can use for this information. So the previous low has been spotted and I've got my trade set up right there, okay? That's gonna be my target. But where do I put my stop? This is where it's gonna be up to you to kind of play around with. You can put your stop either at a 2-to-1, you can put it at a 3-to-1, meaning that if this is a 3-to-1 example, 1 times the risk for 3 times the reward. So that would mean if this was a $90 profit, this would mean that we're losing $30 if price stops us out. If price kept going and stopped us out, we would lose $30. And if we win, as you can see in this example, of course, we would have made $90. So risking 30 to make 90. That would be a 3-to-1. The other option is if you want to leave your stop a little bit less tight, it'd be a 2-to-1. So if you risked 50, your potential reward is 100. Okay? So hopefully that makes sense. Guys, let's take a look at another example here, see if we can spot a similar setup. We'll take a look here. Now we've shifted. Now the market is moving bullishly. And let's say that we've identified this trend line level here. Okay? We've identified this trend line. Remember our criteria, 200 period SMA. We're trading above it. That's bullish. We have a nice little trend line here showing continuation to the upside. And let's see if we can get some sort of pullback. Well, you can see price pulls back to our level. And let's repeat the process again. Look at that. Bam, looking to the left. We have supportive structure here. Consolidation in this area showing potential demand. That's step number 1. Step number 2 is our trend line here. And step number 3 is that 200 period SMA is pointing in our direction. Okay, so we have those 3 factors. That meets our criteria for a trade. And if you enter the trade here, let's say that you even entered on the trend line. You set your target at the recent high. Next up, let's say that we did a 2-to-1, and there you go. This trade actually ended up not working, but you can see it was very, very close. The principle here, and also understanding that you're not going to win every single trade no matter what. It's more about, in these examples, showing the setup, showing the concept so that you can see it. We take the recent high, you can see price barely missed it. We came all the way up to this point and we took profits. If you were trailing your stop, you might have trailed it on the way up. That would be another thing for you to test out and trade in your own concepts. In this case, what ended up happening, price actually reversed and would have stopped us out by kind of perfect definition, right? Because we didn't quite make it to the recent high. But the point being, we saw a setup, and again, it pulled back very nicely, and we actually saw this market rally in favor of this trendline continuation concept. This is something that we see in markets happening again and again, and that's why I say this strategy is relatively easy to pick up for a beginner in terms of the technicals, in terms of where to put your targets, where to put your stops, and I think that overall it's a decent strategy for somebody who's just getting into trading. Now, there's one additional factor that I want to talk about with this strategy, okay, and that's going to be your risk. Okay, so we've already talked about the stop loss and the target, right? One more thing is to talk about how much should you risk per trade. My opinion, and this is purely just my opinion when it comes to risk management, is no more than risking 1 to 5% on any particular trade. Remember, we were talking about the stop loss here. We have a stop loss, we have an entry, and we have our target. Well, on the stop loss, this is where you're going to measure your risk. My opinion would be I don't want to risk more than 1%, 1 to 5% on any particular trade in terms of this strategy. Okay? So that's how I would do that. I would measure out my stop loss distance or my lot size positioning to make it so that my stop loss is only going to be 1 to 5% depending on your risk tolerance. If you're willing to experience bigger drawdowns but potentially bigger rewards, you could go for something like 5%. If you're more conservative like me, 1% is fine, right? So risking 1% of the account on the particular trade might be a decent setup for you if your technicals are pretty good and you're finding good setups. Guys, I hope you got something out of this. Make sure to like the video down below if you did enjoy it, and also subscribe to the channel for more content in the future. I hope you have a great rest of your day. We'll see you back next time.